All right, move over. Apple, soon the world's most valuable publicly traded company, may not be from the tech bubble of Silicon Valley, but from the hot deserts of Saudi Arabia. After years of delay and amid new security threats posed by rival Iran, state oil giant Aramco is on the verge of going public. The move can raise huge amounts of money for the kingdom, which it wants to use to diversify the economy that until now has been almost exclusively based on oil.
After years of waiting, Saudi Aramco, Earth's biggest climate polluter and the world's most profitable company, will offer investors a piece of the kingdom's prize asset. State-owned Aramco accounts for 70% of Saudi Arabia's revenues. The IPO on the Riyadh Stock Exchange could value the company at $2 trillion and make Aramco worth nearly as much as Apple and Microsoft put together.
For us as Saudi Aramco, I think we are proud of the listing of Aramco. It will increase our visibility internationally. We are a very strong company by sharing a lot of information as required by any listed company. There will be a lot of analysts that will review our data and compare it with other listed companies.
Aramco accounts for 10% of the world's oil production, and the company has the biggest carbon footprint in the world. Climate campaigners are worried. They want fossil fuel companies to scale back and cut carbon emissions, not to expand. This is a move in the opposite direction. But the economy of Saudi Arabia must change to survive. Oil can't last forever. Some analysts say around 70 more years. Prince Mohammed bin Salman wants cash to diversify. The prince wants tourism, manufacturing and renewable energy to drive growth in the post-oil world. He has major ambitions to transform Saudi into a top 5 global tourism destination.
All right, let's cross over to our financial correspondent, Chelsea Delaney in Frankfurt. Chelsea, first of all, why an IPO in Riyadh and not in New York or London or Frankfurt?
Listing Saudi Aramco on a local exchange is a really important symbol for the government there, because they've really made this push to get more investors investing locally into Saudi companies, and they've made a lot of progress and transparency and regulatory changes. So I think it's important for them as a symbol to list this locally, but they are planning at some point in the next few years to do a second international listing. So they're going to do the small local listing where they'll list about 2 to 5% of the shares, and then in a couple of years they've said they plan to do another listing, and they've actually chosen quite interestingly Tokyo, because they've said the U.S., London, China, they've all have so many political issues right now that it would be safer for us to list in Tokyo.
All right, interesting view there. Now, the IPO, of course, is part of Saudi Arabia's attempt to sort of divert from its oil dependency. How's that playing out so far?
It's been rocky for the first couple of years. They announced this push in 2016, and a big part of that was collecting more taxes, doing more to raise energy prices for things like electricity, utilities, and that definitely weighed on the economy. At the same time, they have had trouble attracting foreign investment into these key industries like mining, logistics, just to an industrial base. So they have had some stumbling blocks, and they still remain highly dependent on their oil revenues. It's still about 70% of their government revenues, but it does appear that it's picking up a little bit the non-oil sector.
All right, Chelsea Delaney there reporting for us from Frankfurt. Thank you so much.